Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for both Bitcoin and Ethereum to take a look at what's been going on most recently and what I would expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. You'll also find links to our Patreon services and the new community-led Cheeky podcast in the description down below. So why not check those out if that sounds interesting to you guys. Okay, guys, let's get started. Let's jump right down into this. What we're going to do is we're going to start things off by taking a look at Glassnode, and then we're going to jump into the charts. So we're going to start over here. We're going to just talk briefly about what's going on with the data that sits in the background, okay? So in 2022 so far, we have seen 7.17 million Bitcoin go onto exchanges, and we've seen 7.43 million come off of the exchanges. So you can see a little bit of an accumulation curve going on there. We can also see that the balance of Bitcoin on exchanges has been going down. So we can see as a macro over 365 days here, and that basically, although we have a couple of fluctuations in places, the macro is very much that the exchanges are losing Bitcoin. And this is again reinforced by taking a look at the net difference between your inflows and your outflows, and each bar is a 30-day average. We can see that we've started to really, dwindle down the amount of accumulation that's been going on, whereas before it was actually quite steep. Okay, so it's an important note just to know that we are having some pretty significant inflows at the moment. Okay, we'll get into that in a moment. So down here we have the hodl waves. The hodl waves are basically an indication as to whether or not people who have been long-term hodlers are remaining hodlers or whether they are being shaken out of the space. So we have more than 10 years, 7 to 10, 5 to 7, 3 to 5, 2 to 3, 1 to 2, and then we go down into the smaller buckets over that side. Okay, so for the most part, we can take a look at the 10 years or more. These guys are basically potentially Bitcoin that's lost, right? This is Bitcoin that's maybe no longer actually accessible. Maybe the keys are gone. But that's 13% of the supply, 13.03. It's actually a slight increase. Over this side, the 7 to 10s, no change day on day, which is good to see. Slight increase with the 5 to 7 years, which means we have a slight decrease with the 3 to 5s as they move up a bracket. And of course, we've got the 2 to 3 years, no change there, and the 1 to 2 years, no change there. Everything else is all small, where basically you expect to see some fluctuations. There's actually a little bit of a decrease in the last 24 hours. So essentially here what we're doing is we're seeing that there's long-term hodlers remain long-term, and there's some small activity down the other side. Not actually anything to kind of worry about, which is good to see. Okay, let's move on. Let's keep this thing running fluidly. Okay, so this here is our Glassnode inflows and outflows data for Bitcoin. Okay, this basically shows us both your inflows and your outflows overlaid on the same chart. This is useful because basically it allows us to compare whether or not the inflows or the outflows are significant when related to each other, rather than being, focusing in on just inflows and basically scaring people if the inflows are high. We can also take a look to see whether or not the inflows are being matched with the outflows. So in the last couple of days, we have actually seen too much come on rather than go out. So yesterday, for example, was 39,000 inflows with 36,000 outflows, whereas the day before was 34,000 inflows with 27 on the outflows. So if the red line is above the green line, that would be deemed negatively, and if the green line is above the red line, that's deemed positively. But if I just come back over here, we can see that we are seeing a dwindling down, and essentially, this is bad if we want to see the price continue to move on up. Okay, cool. So that's your inflows and your outflows. Let's move on to the most interesting charts, which are, of course, the wallets. So here we have the 1,000 Bitcoin or more, the 100 Bitcoin or more, or the 10 Bitcoin or more. Okay, we also have the 1 Bitcoin or more over this side. Okay, so let's jump into this. So basically, what we are witnessing here, and these are all over the last 30 days. Okay, I think these are 30 days. Let me just quickly, they're over 30 days. Oh, let me get rid of that. Okay, so on the left-hand side, we can see whales. Okay, these are basically 1,000 Bitcoin or more, and they are aggressively de-risking Well, that's one word for it. We could also say they're aggressively dumping their positions. And the sharks, so you can argue, they actually started a little bit of accumulation at the bottom here, but aggressively still de-risking over that 30-day period or dumping over that 30-day period. Whereas the smaller wallets, the smaller the wallet gets, the more FOMO seems to have kicked in and the more aggressive accumulation they're going through. Okay, so 10 Bitcoin or more are aggressively accumulating, and the same can be said for the 1 Bitcoin or more are very aggressively accumulating. However, it's always important to note that the whales are the big money, okay, and the big money dictates the way that the market is going to move. And if these guys are dumping their positions, they needed to have liquidity to be able to do it, and the liquidity has been provided from the retail investors. Okay, so all the people FOMOing in because they think the bottom is in, essentially looks like basically they provided the exit liquidity for the whales. So the whales are coming out and you guys are going in. That to me doesn't make a lot of sense, right? So I think essentially we look at this more, I guess, logically, and we follow the money. Okay, so the big money is not going into Bitcoin right now. It's not wanting to have the exposure to it, and I can see why from an 𝗕𝗪𝗠𝗃 theory or a just a logical kind of response to the chart data as well, which we'll go through. So for me, I'm following what the whales are doing in this particular example. And there's a couple of examples where, you know, you can actually take a look at where they accumulated and where they got into the markets. Let me just bring this up quickly. I did speak about this yesterday, but let me just go ahead and just quickly bring this up into our 6-month view. Let me just find that 6 months and apply that. There you go. So basically at the end of February, there was shot on up. Okay, so basically heavy accumulation down at these low points. Now this was about $32,000 Bitcoin. And then when it was right at the top here, when they started to kind of come back down again, we are talking about $48,000 Bitcoin. Okay, now obviously they haven't completely all come out, and they are starting to come out over here. So we would argue that the price is obviously cheaper than it is now. It's cheaper now than when it was when they first bought in. So they're selling it at a loss, and you'd ask yourself, why are they selling it at a loss? You have to understand that a whale is a whale for a reason. They don't like to lose, and typically they decide the trend in the market. They decide the direction of the market. So when they are coming out here, the only reason that they would sell at a loss is they're assuming that there are going to be some cheaper prices for them to accumulate once again. Okay, so a logical response here from my point of view is I'm going to follow what these guys are doing. If these guys are coming out, then essentially, you know, we should be also coming out. Now, essentially, and I said that word a fair few times, you know, we should have all been out or thinking about coming out really at the top of $48,000 as per the 𝗕𝗪𝗠𝗃 theory at the time. You can search the channel where I'm predicting Bitcoin to $47,500, for example. And that's very much aligned to what these whales were doing. But since then, they've just been aggressively coming out, okay? So we should be really cautious when they are, you know, this heavily de-risking themselves from Bitcoin. This doesn't give us confidence in thinking that the bottom is definitely in or anything like that, okay? So I wanted to kind of start things off with that, but with that done, and you know, we can see that all the retailers, I say all the retailers, but a large majority of retailers are jumping in and providing the exit liquidity. It's a concern, but let's go ahead and take a look at the Bitcoin charts and keep this video flowing nicely. So let's turn that one off. There we go. Okay, so we've got a potential push to a maximum height of about 26,500 as per 𝗕𝗪𝗠𝗃 theory, in my opinion, okay? We're looking at this ABC with a 1-to-1 ratio right up here at $26,500. Now, that $26,500 is also this area of a wave 3 support line, and also an area that was never retested. So retesting this area and getting rejected from it, I think has a high probability, okay? And then, of course, moving on down from there. Now, let's go through why that is potentially the case, right? Now, obviously, before I get into that, I want to kind of acknowledge that our move to the downside here, a fifth wave of the fifth wave, this here is a really good strong chance of being the bottom. However, when I take a look at the Glassnode data and I take a look at the whales, I think to myself that it's highly likely that this probably isn't the bottom, okay? So knowing that the whales are coming out and de-risking specifically all around here, still, then this gives me concern to think this might not be the bottom, even though this is a fifth wave of a fifth wave, and I have no 𝗕𝗪𝗠𝗃 structures to say that we're going down into new lower lows. Following the money would indicate that we might actually start seeing new lower lows, okay? Now, I don't know what the catalyst is going to be for it, but essentially all of this is looking like we are going to correct up to this point and then pull on down. Now, if I bring this back up and I start talking about why 26.5K has a lot of confirmational zones, we can go ahead and just check this recent push to the upside here. Okay, and we can go ahead and confirm this with the recent pullback to the downside. And here you can see that, again, we're just fighting that upper range. If we do just pull this back down ever so slightly lower, then we can say that we get this confirmation around this $26,500 range. So, you know, we've got multiple different wave structures here. So we go up with another W, X, and Y, for example, inside our C wave. And of course, this ABC wave is inside another WXY on a slightly larger scale. So again, everything is nesting together really, really nicely. As you can see, all of these corrections. Now, when I say corrections, come down here for a sec, we have two correction types. Grab those. Like this, right? ABC and WXY. For the most part, you don't need to worry about why these are labeled differently. Basically, one of these will have a 5-wave structure and one of these will have a just have 3-wave structures, okay? So those are the types of corrections, and we call them corrections because corrections are short term. They could be short periods in time, and they are not a trend, okay? They do not set a trend in a direction, okay? And then obviously what we have afterwards, though, out of that is a trend-based structure, which is a 5-wave structure with no overlaps going on within these waves here. Okay, we can see they're not overlapping. Okay, that's considered a trend, and it's usually very, very strong in that direction, with a wave 3 typically being 1.618 of wave 1. And I've broken this down before, but basically wave 1 is considered to be a fake move. Okay, no one believes in it. Okay, that's a pretty bad way of writing fake. Wave 2 is then basically a lower low, and basically institutions buy that one. They basically sell at the top here of wave 3. Okay, so that's where institutions and whales will basically be selling. Okay, then you have wave 4, which is basically just FOMO. Okay, this is basically where retail money jumps back in, and wave 5 is only retail money. Okay. And basically what that means is that you have this breakdown of our 5-wave structure, and wave 5s are usually really weak, and they're really weak because essentially it's only been driven from retail and the whales are coming out. So if we think about everything that's going on here with whales de-risking, it's because they're in a 3-wave structured upwards and there is no 1.618 trend to the upside or anything like that. So cautious I am, of course, and I think, you know, it makes sense for retailers to overly be cautious at this point in time. So when we start seeing this structure here for Bitcoin, and all we're seeing is 3-wave structures, there is no trend going upwards, then of course, you know, we didn't break the downward trend. Okay, even though we've finished this move here, right, and our trend is down because we're talking 5-wave structures, but because we haven't broken that trend, as in all we've done is move up correctively, then our downward trend still sticks. It's still there. So caution definitely is something that I'm applying here, because as those whales are aggressively coming out, we could all of a sudden, out of nowhere, and there's no need for it, but we could basically just see another 5-wave drop. And that could trigger a whole new move to the downside that we just haven't been seen. But yeah, okay, because this is technically the end of the structure, which is 335, yet we were not seeing the trend upwards, okay? So for me right now, we are looking at that 26,500. That's probably the maximum height that we can get. And if we throw the stochastic RSI in here, and we just bring this up, we can, of course, see that we are moving from oversold to overbought on the 1-hour chart. Bring this up into the 4-hour, we're moving up from oversold to overbought on the 4-hour. The 8-hour is all the way down in the oversold, so that's not too bad. The daily is obviously up nice and high, so again can come down. And the weekly is the biggest concern out of everything, where we've progressed far too much to the upside and ready for correction to the downside. Or we'll just get a little bit more to the upside and then we're done. Now, let me focus in on this weekly chart, because what I was talking about was basically this area of February here. So let me find it. Right, the whales were aggressively buying in here, and they should have been selling here. And this is what we were talking about at the time, where I was saying I thought this was the bottom at one point, okay, for our correction. Well, it's definitely the bottom of our correction, and I was predicting out 47,500, and after which it didn't really matter. We knew the movement to the downside was going to happen, and we just needed to make sure that we were prepared for that. And you can check back on the videos and understand what I was talking about at the time. But essentially here, what we were witnessing is whales coming in at the bottom, and anyone on Cheeky Crypto was being told that you might want to consider your positions here. Okay, then of course we move on down and they're selling down at the bottom here, which doesn't make a lot of sense if they're buying all the way at the top, right? So on that note, let's clear that out and talk about what was going on from a stochastic RSI point of view. The weekly was oversold here, okay, in the same way that it's oversold here. Okay, we were overbought at the top here, and we are going to be overbought probably by the time we get up here. Okay, we'll be back up into this overbought area, meaning that we're going to have a pullback. Now, in that move from overbought to oversold on the stochastic RSI, we dropped this amount. I'm not saying that we're going to drop down into, massive lower lows or anything like that, but we have to consider these are patterns that repeat themselves time and time and time and time and time and time again. So when we see all those kind of really weak terminologies of we're setting some higher lows and we're having all of these things going on and we're setting the higher highs, and I'm looking at it, I'm thinking to myself, well, these things are absolutely meaningless on their own. You have to have multiple different reasons as to be thinking about it, and what we're looking at here is very similar to what happened before, and the fact that this weekly stochastic RSI is moving as fast as it is does not give us confidence in the fact that we are going to be moving up in a really significant way. And then what we want to see is moments where we're oversold like this and we go up into the overbought area like this, okay? And we have really good runs and really good movements in this space. But that's not what we're seeing at the moment, okay? So for Bitcoin, concern, definitely. And, it will be interesting to kind of see how it plays out. But ultimately, I'm not giving this a huge amount of confidence, and I am expecting to move on down. I'm not saying that new lower lows are going to happen, but I do think there's a high probability of it as time progresses here. Okay, so with Bitcoin kind of being what Bitcoin is doing at the moment, let's actually jump on over into Ethereum and take a look at a brief update there for ETH, because ETH is also following some interesting stuff. Okay, so as we can kind of see, we have got a 335 corrective structure moving on up. Now, let me show you what this looks like first. We have an A, a B, and a C. Okay, just like this, although that C is actually a little bit shallower at the moment. And what we've got basically is a 3-wave structure in here, okay, and a 3-wave structure in our B wave, and then we've got a 5-wave structure in our C wave. So as I said, ABC has to contain a 5-wave move, whereas WXY does not contain a 5-wave move. Makes sense? So that's kind of what we're looking at for Ethereum. Now, because it's an ABC and an ABC is a 3-wave structure, it is corrective. And the 5-wave structure is a micro trend inside our C wave, basically meaning that there was a small trend on a real micro scale inside Ethereum, but it is not a macro trend up, okay? It's actually formed a part of a corrective move upwards. Gets a little bit complicated, but basically, essentially, what we're talking about is the top of Ethereum being up here. Now, at the moment, we're breaking down, and this is very much needed. The only question we have is whether or not this is some kind of really big wave 4, which I don't think it is, because we have hit our little wave. We have hit the 1.618 on this move down, meaning that this is actually starting a 5-wave move to the downside. Okay, so if I move that 5th wave over that side for a second, we can see here that this is a wave 1, wave 2, wave 3, this being a wave 4, and we move back down into a wave 5. Now, we have overlap between our wave 1 and our wave 4, meaning that this would have to be an ending diagonal pattern if it is to start forming out the wave 5 that we think is potentially going to be happening here. All eyes are on $1,784. That would invalidate any kind of motion to the downside. And this could just be corrective, okay? It could just be 3-wave structures being strung together. But for now, what I'm going to do, based on the fact that it's after a 5th wave high, I'm going to mark this up as a ending diagonal, meaning that we'll just come down ever so slightly lower, okay, and basically complete this move. Now, it's not expecting to be anything more than that, but, it's basically going to be this kind of structure. Then, of course, afterwards, I would expect a move upwards towards 1,784 $4, but fail to cross above it. Now, it's also possible that that's what's going on already, and the wave 4 is actually right in here somewhere like this, and we can just mark that as our beginning move, and then we move on up here. One of the things that's consistent regardless of starting position is that we do not cross this 1,784. Okay, so no matter how we want to kind of draw it out, whether we draw it like this or we draw it the other way, one of the key things here is that we cannot cross the high point of 1,784, and then after that, we're kind of expecting some really big kind of drop to the downside to happen. Okay, now this is because we are following the rules of Elliott wave theory. Let me bring this to a 4-hour. Okay, and that is that we've had this really big wave 3 down here. We've had, this is all a wave 4, and then wave 5 will be down here. Now, this is only possible because we have not invalidated our wave 4. Wave 4 is not allowed to cross wave 1, and wave 1 is over here at 2,159. So, unless the price of Ethereum can move up higher than 2,159, down we must go. Okay, those are the rules of Elliott wave theory. We don't know what's causing it or what would cause this kind of massive shakeout, but investors are going to be incredibly nervous at this upper end, specifically because they've already seen pretty significant gains and you're at some really key Fibonacci levels. So a breakdown from here is highly likely. Now, when we throw the stochastic RSI into play, you can see that we're wiping out that hourly stochastic to the overbought area pretty quickly without doing too much price movement, meaning that we are probably going to pull back down. That's on the 4-hour, sorry. On the 1 hour, we've got some room to grow. On the 8-hour, we're coming out of the oversold area. On the daily, we've got to move down, and on the weekly, we're almost overbought. So from a momentum point of view, we are definitely looking like more selling pressure is likely to occur, although there's going to be some small kind of pushes to the upside, but those are so small they're probably not worth taking advantage of, in my opinion. Essentially, our directional move is $570 to $746, which does seem a bit crazy. I've been called all sorts of different names under the sun when I come up with these things, but we are talking about 50% move to the downside unless we can prevent that from happening by moving up higher than 2,159. Essentially, it is as simple as that. These are very basic rules, and yeah, so until proven otherwise, down we must go for Ethereum. So that's kind of what's going on there, and as Ethereum, as Bitcoin pulls back to the downside, many of those other altcoins are also going to come crashing to the downside as well. So we've got some expectations of where those are likely to go. Some are a little less clear and some are crystal clear, as Ethereum here is really, really crystal clear in the sense of what has to happen. If we fail to push up higher than 2,159, we absolutely have to come on down here. This is a very clear structure, whereas something like Bitcoin doesn't have the as clear of a structure as this. It doesn't indicate that we have to go down to new lower lows, but I do anticipate it probably will, based on the whale activity and the realized price of Bitcoin. So guys, I'm going to leave this video right there. A brief update on what is going on with Bitcoin and Ethereum. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.